Hello viewers and my dear students. Already we have completed 4 problems on computation of income from house property. In this video, 5th and 6th problem I am going to explain. So if you have watched all the 4 videos, you got the idea of how to compute the income from house property according to the provisions of Income Tax Act. So it's not so difficult. Every problem, 1 or 2 new points you will come across. Remaining problem will be same. Procedure will be same. First we have to calculate the GAV, gross annual value. We can calculate GAV by considering 4 values: MRV, FRV, ARV, SRV. If the house is governed by Rent Control Act, then standard rent will be given. In that case, 3 steps we apply to find out GAV. Otherwise, if the house is not governed by Rent Control Act, only 1 step we can find out GAV. That means standard rent will not be there. Only MRV, FRV, ARV. That's it. So after finding out the GAV, deduct the municipal taxes. We'll get the NAV, net annual value, deduct the deductions under section 24, 24A, 24B. We'll get the income from house property. So comparatively, this head of income from house property is much easier compared to other heads. That's why be perfect on the provisions of this. So before starting the 5th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready before watching the video. Take the screenshot of the solution of 5th and 6th problem, then I'll explain each and every point in detail. Come on, see the 5th problem. On 1st April 2020, Mr. Manohar purchased a house in Hyderabad for residential purpose for rupees 23 lakh. For this, he took a loan at 10% from Central Bank of India. First of all, our previous year begins from 1st April 2020 and ends on 31st March 2021. This is the previous year. And income earned during the previous year is taxable, assessed in the assessment year. Assessment year will begin from 1st April 2021 to 31st March 2022. So 21-22 assessment year, 2021 previous year. So here beginning of the previous year he purchased, Manohar is the owner. So he purchased a house for 23 lakh, he took a loan at 10% which has been let out to Mr. K.R. Reddy. K.R. Reddy is the tenant on a monthly rent of 20,000. So 20,000 into 12, 2,40,000 is the ARV. The house was occupied throughout the year. The municipal valuation 1,20,000. MRV 1,20,000. Municipal taxes 10%. Here municipal taxes are not given in amount. It is given percentage. So this municipal taxes will be calculated on MRV. Here MRV is 1,20,000. So 10% of 1,20,000. 12,000 is the municipal taxes. Standard rent 1,50,000. Standard rent is given. That means the house is governed by Rent Control Act. So 3 steps we apply to calculate the GAV. Mr. K.R. Reddy could have obtained a similar house at a rent of 14,000 per month. This is the FRB. The rent of the similar house in the same locality, that is FRV, 14,000 per month. During the year, Mr. K.R. Reddy did not pay the rent for the month of March and vacated the house. That means out of 12 months, 11 months tenant has paid the rent. 12th month, that is March month, he has not paid the rent and vacated the house. That means it will become unrealized rent. Because he has vacated, he has gone. So 1 month rent is unrealized rent. So annual rent how much? 20,000 into 12, 2,40,000. 20,000 into 12, 2,40,000. Out of which 1 month rent he has not paid. So minus 20,000. So 2,40,000 minus 20,000, 2,20,000 is the ARV. Compute income from house property. Very, very simple. The only new point in this problem is 1 month unrealized rent is there. So to calculate the ARV, we deduct 1 month unrealized rent. That's it. So here Mr. Manohar computation of income from house property for the assessment year 21-22. GAV less municipal taxes, net annual value, less deductions 24, 24A, 24B. Then working note. In working note, we'll find out the GAV, gross annual value. The house is covered under Rent Control Act. So the GAV is calculated in the following three steps. First step, ERV, expected rental value, is the higher of the following two. MRV, FRV. MRV is given in the problem 1,20,000. And FRV, fair rental value, rent of similar building, it is given 14,000 per month into 12. Comes to 1,68,000. Higher of these two is the ERV. So 1,68,000 is the ERV. Second step, adjusted ERV is lower of the following two. So adjusted ERV lower. ERV, how much we got? 1,68,000, or SRV, standard rental value, given in the problem 1,50,000. Lower of these two is 1,50,000. This is the adjusted ERV. Now GAV is higher of the following two. Adjusted ERV or ARV. So adjusted ERV 1,50,000. Now ARV. Just now I told you 1 month unrealized rent. The owner has given the property on rent for 20,000 per month. So 20,000 per month into 12, 2,40,000. But minus 1 month unrealized rent 20,000. So 2,20,000 is the ARV. This is a new point you have to remember, you have to focus. Already I told you in the previous videos, always keep ready a notebook and pen calculator beside you when you watch this video. Whenever I say something, immediately you should note it down, because so many provisions are there. There is possibility you will forget it. So always keep it a record. So 2,20,000 is the ARV. Now higher of these two, 1,50,000 or 2,20,000, higher is the GAV. So 2,20,000 is the GAV. So gross annual value. Municipal taxes are given in the problem 10% of what? Of municipal rental value. Municipal taxes are based on municipal rental value. So 10% of 1,20,000, 12,000. Deduct NAV 2,08,000. Standard deduction under section 24A, that is 30% of NAV compulsory, every problem we have to calculate. 30% of 2,08,000, 62,400. Now interest on loan taken. Interest on loan taken. 23 lakh rupees loan he has taken at 10% rate of interest. So 23 lakh into 10%, 2,30,000. Take the total 62,400 plus 2,30,000. It comes to 2,92,400. Deduct 2,08,000 minus 2,92,400. You are getting negative because deductions are more than NAV. Deductions are more. So 2,08,000 minus 2,92,400, you are getting minus 82,400. That means it's a loss. Loss from house property 84,400. That's it. This is the end of problem number 5. Now problem number 6. Mrs. Sandhya, 45 years of age, owns a house which was let out to Mrs. Devi on a rent of 10,000 per month. So Sandhya is the owner, SSC. She has let out the property to Mrs. Devi, tenant, at the actual rental value of 10,000 per month. Municipal value of it is 1 lakh, MRV 1 lakh, and fair rental value FRV 1,10,000. Standard rent 75,000. That means again the house is governed by Rent Control Act. Then Mrs. Devi did not pay the rent for July and so was made to vacate on 31st July 2020. That means our year begins from April. So April, May, June. Only 3 months the tenant, Mrs. Devi, she has paid the rent for 3 months. July month she has not paid. July month she has not paid. Unrealized rent for July. Then on 1st August she let out to Mrs. Shanti on a rent of 9,000 per month. So first tenant was Mrs. Devi. Second new tenant was Mrs. Shanti. So actually the monthly rent to Miss Devi was 10,000 per month. But the new tenant Mrs. Shanti was being charged 9,000 per month. From which date? From 1st August. That means during the month of July there is an unrealized rent. There is no vacancy. As soon as the house is vacated by Mrs. Devi, immediately Mrs. Shanti has taken. There is no vacancy. Only 1 month unrealized rent. First 3 months rent paid 10,000 per month. 10,000 into 3, 30,000. Devi paid 30,000. July month, no rent. From 1st August to 31st March. How many months? August, September, October, November, December, January, February, March. 8 months. 8 months, Shanti has paid the rent for 9,000 per month. So 8 months plus 3 months, 11 months. 1 month was unrealized. Then expenses incurred during the previous year, repairs 8,000, ignore. Municipal taxes 15,000, allowed as deduction. Interest on loan taken to construct the house 72,000, allowed as deduction under section 24B. Calculate income from house property. Again, the only new point here is 1 month unrealized rent. That's it. Very simple. First of all, you write on the format as usual. Gross annual value less municipal taxes, net annual value deductions 24A and 24B. Here better you write down interest on loan taken to construct the house under section 24B. Now here GAV. The house is covered under Rent Control Act, so the GAV is calculated in the following 3 steps. First step, higher. ERV is higher of the following to MRV, FRV. MRV is given 1 lakh, FRV is given 1,10,000. Given in the problem, 1,10,000 is ERV. ERV finished. Second step, adjusted ERV, which is lower of the following two. ERV or SRV. ERV we got 1,10,000. SRV, standard rental value, given in the problem 75,000. So 75,000. Whichever is lower, 75,000 is lower, that is adjusted ERV. Now GAV is higher of the following two. Higher of the following two. Adjusted ERV 75,000 or ARV. ARV we got 1,02,000. How we got 1,02,000? Here I have written. ARV 10,000 into 3. The first tenant was Mrs. Devi. She paid the rent for April, May and June. July she has not paid. So only 3 months rent she paid. 10,000 into 3, 30,000. But from 1st August, Mrs. Shanti has taken the property for 9,000 per month. She has paid 8 months. August, September, October, November, December, January, February, March. 8 months. So 9,000 into 8, 72. So total 1,02,000 is the ARV. Now whichever is higher, 75,000 or 1,02,000? 1,02,000 is higher. So GAV we got 1,02,000. Take this 1,02,000 here. Municipal taxes 15,000 given in the problem. As it is, I have taken allowed. NAV 87,000. Standard deduction under section 24A, 30% of NAV, 30% of 87,000, 26,100. Interest on loan taken to construct the house under section 24B, that is also given in the problem 72,000. Add up 98,100. So 87,000 minus 98,100, you will get 11,100 negative because deductions are more than NAV. NAV 87,000, deductions are 98,100. So 87,000 minus 98,100, you will get minus 11,100 loss from house property. That's all. So in this problem, two problems I have explained, that is 5th and 6th. Inshallah, next problem will continue in the next video.